Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
What's going on, guys? Brinks Trades back here for another week of breakdowns. How's everybody doing? Hey, DJ Rod says, what's up? Thomas, what's going on? Moki or Mike Mo, what's going on? How's it going? Where's everybody calling in from? I love kind of seeing, where everybody's based at and where everybody's, calling into the live call from. So while I get the charts pulled up, we'll go ahead and, feel free to drop something in the comments and go from there. Give it a couple seconds. I always try to give it a few minutes before people hop on, as people tend to hop on, to kind of see what's going on with people. DJ Rod. Okay, cool. Narita, NYC. Narita, I didn't know you were based in New York. Okay. I'm assuming this is Narita from my group. So if it's not, then you're like, okay, why are you being weird? But I'm pretty sure this is Narita from the mentorship group. ATL here. Okay, Atlanta in the house. Dallas, Texas. Okay, so we got people from all over. Love to see it. You tend to forget that trading is this global, people are not just a national thing, but a global thing. Usually there's some people that have been hopping on lately that are live in Nigeria, South Africa. There's been a couple people on there too. So it's been really cool to kind of see, especially on the Forex front, everybody around the world trades, right? So it's it's crazy to really be, talking to people from around the world that, that do this, all hopping up on the calls. I think we've had people from Italy in the past. Hugo from New Jersey. Shout out Hugo, also another mentorship student. So yeah. So let's go ahead and get into it. So again, I do this every week, but if you guys don't know me, I'm Brinks Trades. And so I've been a day trader for a little over 10 years or about 10 years now. And have started out in Forex space and really just do the breakdowns here for the indices. And so, my style of trading, I look at mostly the indices, but I also touch on Forex as well with, just kind of how to trade, all markets really. And so for the context of these videos, I'm going to just do the Forex breakdowns, but the indices breakdowns, but I also occasionally upload Forex analysis to my YouTube channel, so youtube.com/BrinksTrades, but then also my Telegram group, the TickUps mentorship chat or TickUps chat, which we'll post a link in the description of this call if you're not already in there. But I just occasionally do updated analysis throughout the week. So right now, just wrapped up my most recent mentorship, and so it's been really cool to watch new students come on board and some of the existing students come on board and really, learn, and watch them grow and progress. So let's talk a little bit about what we wanted to see here this week. So going back to the past week, I think we had, I want to say NFP was yesterday, and we had some other news events as well. I think FOMC was on Wednesday as well. So there was a lot of news events that happened this week that we wanted to kind of take a look at and kind of, avoid and look at in the market. So again, coming into last week, we wanted to see a few things. So I go to the weekly time frame, kind of get the better analysis of what's going on. So we wanted to see, the market really run for this level of liquidity here, 106 or 106.91 on the dollar. And again, the reason why I do dollar first is because if you have dollar, you can kind of get a better understanding of where the other markets are going. So we saw that the market really did a couple of things. We wanted to see the market run for this high over time. And based on the weekly time frame, I'm still kind of looking here for the market to really make, a run at this high, really trading back into this old imbalance here and really filling in and mitigating the rest of this imbalance. We know these weekly time frame moves, they'll take a long time to play out, right? So we want to kind of see where the market's at. So just this inverted fair value gap, this fair value gap here, it's kind of leading me to believe that the market's still going to continue to try and run higher. So that's in the weekly time frame. We go to the daily time frame, and it's a couple levels here that I want to see the market respect. So again, this fair value gap here, but there's also a secondary one here as well. So I really want to see how the market reacts to this levels going into the next week. There's a couple levels that I just want to notice. Again, I'm going to be looking at consequent encroachment of this wick, which also lines up with about the high end of this overall fair value gap. So I'm just going to note this here, right? So that level right there is kind of like a fail safe or low level. We also noticed that we traded back into this now inverted fair value gap down to the consequent encroachment at that level as well. So ideally, these are kind of signs that we're still probably looking at bullishness in the market. Again, my students, we talk about this all the time, a power of three, right? So you can kind of see that, that kind of play out. So I want to see this potentially go higher still. My kind of like fail safe level will be if we take out this low or if we start trading below this consequent encroachment. So I'm bullish just because the bullishness didn't happen right here. Again, my students know the rules about two fair value gaps and how to look at that. So I still want to see this thing go higher, and the weekly time frame is still giving us kind of bullish sentiment too, right? Trading back into this old imbalance. So overall, I still want to see the market really kind of attack higher highs and really start attacking this market to get to this 106 level over time. So we're bullish on, hold on, give me 1 second. If we're bullish on dollar, we should want to see the indices continue to go down, in Euro USD. Euro USD continue to go up. Go down over time. So in indices, and we want to see Euro USD and pairs with the USD is the secondary pair go down if we're looking for dollar to go up, just the opposite, right? So again, let's jump into Nasdaq and see what's going on here. And so one of the things that I called out last week on Nasdaq was this right here. And I said I wanted to see on the weekly time frame that, sorry, this is all stuff for my students and the classes that we've held. I wanted to see how the market respects this fair value gap, right? And on the weekly time frame, our long-term high, our long-term goal is this high here at 18,509. This is NAS100. The reason I'm using this one instead of the futures version like the NQ is because it's just a little less choppy, right? You can see here the Nasdaq on the futures is a little choppy, so it doesn't give me great price action. As far as seeing what's going on here. So that's why I'm using NAS100, which is the Forex version. So if you trade Forex, this is what you'll be looking at anyway. So I've been looking at this level here to see how the market was going to respond to a few levels. Again, this weekly fair value gap that was at started at 17,831 and then ran to at 17,961. So I wanted to see how the market was going to respond to this. Ultimately, I want to see this used as an inverted fair value gap to go higher. Right, I wanted to see something like this play out, where it kind of goes and takes things higher. We go to the daily time frame. Again, there's a few things that I'm noticing that they're kind of lending itself to this idea. I'm not gonna lie, when we got to this part of the week right here, I thought that there's a potential that I was gonna be wrong on the bias. I saw this huge momentum go down, and I thought potentially would be off. But the rest of the week really kind of trading back into that range that we're looking for. So ideally, I want to see the market do a few things, a couple things. I would love to see how the market really retest a few levels. The first level here is going to be this old imbalance here, like potentially doing something like this, where you could see the market even really drop down to this fair value gap and then keep going higher, or really the lower end of this fair value gap here, 1780.46. I like this area here because of the order block. And I want to see, again, I'm looking for ideas and reasons to continue to be bearish, especially since we close over consequent encroachment of this old fair value gap on the daily time frame. So I'm really looking for reasons to take things higher and go higher. So with that being said, again, trading back into this range and going higher is what I want to see. And I'm cool with price dropping down, outside of the daily gap, at least initially, to get the week started. Ideally, the target that I'll be looking for this week, again, this is our long-term target here at 18,000. It's like 18,500 almost. I want to see how the market reacts to this high here. These will kind of be some like partial levels or like some short-term levels on the way to that high. So I'll be looking to see what the market does at this high. Weekly, I'm say like short-term target, and this is the high at 18,212, right? So that high. Let me get rid of that. So ideally, I'm still bullish as long as we stay above this daily fair value gap, and more specifically, the consequent encroachment of this daily fair value gap. So that's really what I'm looking to see here in the long term, or in the short term, to keep moving towards this high. And then obviously, I'm looking at a few levels. This high here at 18,200. This old imbalance that kind of sits above it, and then this high here at 18,360 on the way to our long-term goal at 18,485. So that's what I'll be looking for in terms of targets this week. Let me go to the comment section. Greetings from Uganda. Awesome. Appreciate you from Uganda. Okay, cool. And so, yeah, so that's what I'll be looking for on indices to see what's going on with that. And same thing here on dollar, on US500. If you look at the weekly time frame, again, there's not a weekly fair value gap here. So if there's not a gap here, I'm only looking at a few levels and looking for this high to get hit this week on the way to our long-term targets. This will be my short-term target, whatever level this is. And then breaking this down to the daily time frame. Again, same thing here. It's short-term target on the way to our long-term target. We could run right through this. I would like to see the market do something like this. Do something like that on the way to the high there. Right. So really trading back down to this very small range at 5,100. I also will be looking at a secondary level here to see. All I'm really doing with these secondary levels, these primary levels, is really to like get a better understanding of what levels I want the market to see respected. So what I want to see here is, get rid of that. Someone told me about this. Yes, last week. You hold the shift button down, it should straighten your line out. It looks crooked still though. Okay, cool. So yeah, so I want to see this level at 5,116 respected, as well as the fair value gap here at 5,000. Well, it starts at 5,099. So those are two levels that I want to see respected. So something like that is what I'll be looking to see what happens this week. There also is a small imbalance here that we traded down to already. So let me jump down real quick to the 1 hour. We could. Yeah. No, I don't think so. Never mind. So again, everybody knows that I do these in real time. So I don't look at the charts between the close of the markets and these calls. So I'm looking at this stuff in real time. So yeah, so I want to see this market run for this high here and go from there. So the last pair that I want to look at is boom, 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 Dow Jones, right? So let's see what Dow Jones is looking like. Where's NY? Okay, cool. So weekly time frame again. As we know, obviously our indices are going to move similar. This is a little different than obviously ES, or I guess you call it the S&P. So ideally, I wanted to see the market go a little bit higher and really on the way to this weekly target. There was an old imbalance from here to here. You can see that we are trading through this, and we're moving on the way to our weekly target, which is at all-time high. Again, we closed the market over consequent encroachment, so that's a good sign. I'm going to be looking here. This is a little bit different variation of what we've seen on ES and Nasdaq. So I want to see the market really do something like this, where we trade from this low and continue to move to this high. I'll be looking for the market to run to this high this week. So all of the levels that I've called kind of have a midterm level in between this and the weekly high. So if I go down to the daily time frame, if I'm looking for highs that I want to see violated, it is this high here. Let me get rid of this. So obviously this low of this fair value gap is that weekly fair value gap. But also if we break these things down to the daily, we can kind of see a couple of things that kind of lend itself to the idea that we want to see the market run for that. Let me get visibility. Let me get this off the daily time frame. Cool. So these clusters of highs right here, already my students already know what those are and why we want to see the market run for those. So if you're not a student, hopefully you become one day so you can learn this stuff. So again, we want to see the market run for that level right there, just because we see the liquidity that could potentially be sitting there. So again, I want to see the market do something like this over the next few weeks, or over this week. I don't know. That's a gap. Get rid of that. And so on the way to this high, so I'm looking at two levels. I'm looking for the market to kind of do something like this, trades back into this old imbalance here, and then goes higher. I'll be looking at this high at 39,373. I'll also be looking at the volume imbalance here that needs to get mitigated at close that in at 39,740. So that's what I'm looking for on indices. Does anybody have any questions at all? I'm open to those. Imran Hussein says, "Bro, see reversal pattern. What reversal pattern are you looking at? What are you seeing as far as like what are you?" I broke down three charts. I don't know which one you're talking about. And I guess in the meantime as well, if there's anybody that wants to, you said double bottom on, are you talking about on Dow Jones, or like which one are you talking about, man? But yes, while he's typing that in, if anybody has any questions, or if you guys have any pairs that you want me to break down on the Forex side, let me know, and I got a couple minutes, so I can do that today as well. So you only expect the market to move higher. This is the you only expect the market to move higher, but let's say NAVs, no option for a short-term downside for you. So the way that I look at the markets is I only I come to the market with one bias, right, for the week, what I want to see the market do. And a lot of traders will do this thing where they're like they kind of look at the market like a conditional statement. Like if the market does this, then I'll do this. If the market does this, then I'll do this. And that's cool, but the whole time you're kind of trading, you're trying to trade both sides of the market. You're trying to be prepared for one, for a couple of things. So what I usually do is I come to the market with a bias, right, for the week, and I say this is the bias, this is what I want to see happen, right? I also have an invalidation level, right? And so my invalidation level will be this low right here on Dow Jones, for example, right? So if the market takes out this low, well, yeah, it'll be somewhere around this low, either this low or this low. I'm just kind of giving you an example, but if the market takes out that low, right, then my ideas of bullishness are done, right? And I usually will sit out the week, kind of let the market reset, and I will just take the L for the week, right? But I only really come to the market with one bias because I don't want to sit up here. There's been plenty of times where me as a trader, I've tried to trade both sides of the market where I came into the market with a bullish bias, and then some structure broke or something happened that made me want to change my bias short term. And what I didn't realize is maybe it was just a pullback on a bigger time frame, and it wasn't actually a break in structure for the time frame for the overall trend. So I just try to trade in line with what's going on with the overall trend, right? So I don't try and um I'm not saying that the market can't go down, I guess is what I'm saying. Like we very well could reject from this level and continue to go lower, but that's not what I'm going to be looking to trade for. So how I outline these things is like what I'm looking to see in the market to make me want to engage in the market. And if I don't see that, then I'm not trading, right? So I don't know what I 100% don't know where the market's going to go. Nobody does, right? Anybody that tells you that is lying. But I'm looking for bullish setups. And if I don't see that bullish setups, or if we start getting bearish setups, then I'm just staying out of the market. So that's kind of, hopefully that kind of makes sense. Nasdaq, I can look at Nasdaq and AUD USD. And so I don't really trade with the concept, going back to this here, I don't really trade with the concept of double bottoms or double tops. That's kind of how I was when I first started trading. I kind of look more for liquidity. But let me pull up NZD. Like double bottoms and double tops don't really mean too much to me anymore, to be honest. Yeah, so so New Zealand dollar, I mean, just based on dollar index, if we see dollar go higher, we want to see dollar go higher, then we want to see the market run lower. So I'll be looking for the market to go lower this week, but we'll see what happens. Let me look at Euro really quickly. Yeah, I want to see the market potentially run lower on Euro. I don't like, let me go back to dollar. I don't like how the market is running. Let me go back to GBP. I don't like how, yeah, I think we're still running lower, to be honest. If I had to if you put a gun to my head, I want to see the market do something like this. Yeah, definitely. 4 hour, 1 hour. I want to see the market run for one of these highs. I'm either going to be looking for the market to trade here at the highest, or this potential level, and I'll be looking for opportunities to sell off. So this is kind of what I want to see happen on NZD. I either want to see the market run for this high or this high, one of these two levels, and then continue to sell off. That's what I want to see. And then just looking at a higher time frame target as far as where we think the market can go to. I really want to see this meltdown. I think over time, the daily target that I want to see the market run for is, I'm going to be looking here for this week. At 0.59502. Make this green and go from there. So that's really what I want to see. Is I want to see the market really tank and come to here, or somewhere in here over the next week. This will be where I'm looking, but there could be another imbalance that forms between this low and this high. So I'm just gonna say, I'm gonna say here to be safe, but I'll also be looking at this level here. But ideally, I want to see this melt down and kind of keep going lower. Someone also said AUD USD. I imagine that it's probably going to look the same as that. Yeah, same thing here. Oh, this is trading over though. Huh. Okay. Hmm. Hmm. Yeah, I'm actually getting conflicting signals on euro, Australian dollar, and ran that high. Ideally, I would like to see something like this happen. Like I would like to see I'd like to see something like this happen. We reach up and then continue to go down. That's what I would want to see based on higher time frame stuff and just alignment with the other pairs. I'd like to see that happen. Maybe run this high here. Right, and then go lower. Or run this level here at 0.66206. That's kind of what I would want to see happen. I'm not as comfortable with this one because there's a couple things we're trading outside of this imbalance here. We didn't really respect that. We did run that high though, so that could have been the liquidity that we were trying to get. So I'm a little less sure about Australian dollar, but the setup looks very similar to what we're seeing on euro, what we're seeing on GBP, and then obviously what we're seeing on NZD, what we just called out. So ideally, I would want to see this continue to go lower, but you know, take it with a grain of salt. I would say like I'm not as comfortable with those right now with that bias. So if I was trading, maybe I'd kind of sit out and wait for a little bit more market information on Monday or Tuesday. But that's kind of what I'm seeing. So hopefully you guys get that. I'll stay on for any other questions for a couple minutes, and then that's it. All right, cool. You guys have a good weekend, and I will see you guys next week. Oh, wait, one more question. How many pairs? Bulgaria. Okay, cool. Bulgaria. That's really cool, man. Again, you guys follow me on social media. Brinks Trades. I'll drop I'm on all social media platforms as Brinks Trades. Right. You can follow me there, and go to the link, and you can see my link to the Telegram chat as well. But just lock in with me on social media platforms, and I'll keep pushing content out for you guys. So how many pairs do you recommend for a beginner, really quick? So I would say focus on one, right? I mean, you're trying to multitask and you don't really know what you're doing yet. So I think having one good pair that you can come back and look and just focus on that one for a while. And so for me, I do all of my analysis on dollar index. I get a better understanding of where the market's going to go with dollar. And then I usually focus on one pair. Like I only really trade Nasdaq, right? And that's me. Um, other people can trade multiple pairs, multiple things. I've traded other assets, and I've traded euro. I've traded a bunch at a time. I've traded one at a time. And for me, it's really about your personality. Like I have to be locked into one thing. Like I might slightly have ADHD, so like I need to focus in on one thing. So that's just me. Some people can probably do better and they can focus on a lot of different things, but it's really up to you. I would say like just start with one for now and then see what you can juggle, what you can handle. Are you successful? Right. And I think at the end of the day, like if you aren't being successful trading one currency or one indice chart, right, then you're not going to be successful trying to juggle multiple, right? And it's okay. You're going to miss trades. Like it's okay. You're going to see some people like hop on a chart or hop on YouTube or social media, and they're going to make $1 million on Nasdaq while you're looking at Euro USD. That doesn't mean you should go chase the other pairs, right? I think it's just kind of you have to run your own race and really look at one at a time. So, look at one, start with one, and really just chart. I would say even before you even start charting and trying to trade, look at what the market's doing. Just observe the market, right? Like everybody comes in this thing and they want to place a demo and they want the joy and the like the adrenaline rush of like making money or feeling like they're making virtual profits or virtual money or passing challenges. It's like just watch the market. This is what I tell everybody, all my students, right? Like after I teach you how to trade the market, we just wrapped up a mentorship with them. And so after I teach them how to trade the market, I'm telling them, look, now it's your job to come and just watch and see what we're learning to kind of help build that belief level, because the market does the same things over and over and over again. You just have to watch them without the like ulterior motive of trying to make money. So you have to just get used to what you're saying. You can't really do that if you're trying to focus on a lot of different things or try to make money all at once. So I would say focus on one, and then go from there. So yeah, so that's all I got for you guys. If you guys have any questions, let me know. And yeah, feel free to you can shoot me some messages on Brinks Trades. I'm always open, my DMs are always open. So you can always shoot me a message there if you have any questions, or find me in the Telegram chat and ask me questions, and go from there. So appreciate you guys, and have a good rest of the day.